something. Right. So ledger is what we will start. This is the problem. Nirmal has the following transactions in the month of April. Okay. We have passed the journal entries for all these transactions from first day of the accounting period. Now look at this. First day of the accounting period, 1st April, nothing might have happened, and second also nothing might have happened. On 10th April, they have introduced the capital, okay, for which we have passed the journal entry, okay, like this. Uh, yeah, we have passed the journal entries like this on 10th April. Okay, these are journal entries, right? Now, what we're doing now today in this class is we are going to take the second step of accounting. Second step of accounting. What was the first step? Now, first of all, what is the definition of accounting? Accounting is the art of recording, classifying, and it goes on. So the art of recording is over. Okay, which account is to be debited, how it is to be debited, which account is to be credited, how it is to be credited. We have done it, and we have done it through a book called journal. This is what journal, right? This is what journal. And what is there in journal? There's a date column, there's a particulars column, there's a ledger folio column, and there's a debit amount column, there's a credit amount column. And we have dropped everything in the chronological order. Okay, look at this. This is the date is important, right? We have not categorized or classified any of these transactions. Our only concern was as per the date we have arranged it, chronological order we have maintained. We have not bothered to, okay, classify it, segregate it as goods in one set, sales in another set, okay, and cash in another set. We have not made any sets, okay. We were just following the date, that's it. And we went on applying the golden rules of accounting, the personal account, the nominal account, the real account rules, and passing the journal entries. That was till yesterday. And today we will classify the second step of the definition. We will classify what we have recorded. This is what we have recorded, right? This is what we have recorded. So we will classify what we have recorded. While recording, we need to understand that there's a format. Okay, there's a format. There's one more book called ledger. Okay, a ledger is a book like this, and every page is left for earmarked for an account, or sometimes if the volume is big, the number of transactions for a particular account, for a given account or more, then you may leave 2-3 pages or 5-6 pages depending on your requirement. So a ledger is a book, a big book consisting of so many accounts. Now each account has a format, and we are following T format. Okay, we are following for Usmania University, we are following T format. Okay, now what is the T format? You have the
Excuse me, sir.
Yeah.
Sir, one student is, it seems, is waiting in the waiting
No,
room.
let him wait. Okay, let him wait. Let him join the next class. Okay, so yeah. Now there are 4 columns on the left. Okay, 4 columns on the left and 4 columns on the right. Okay, 4 columns on the left, 4 columns on the right. Now, what are the 4 columns on the left? Date, particulars, journal folio, amount. Same thing you write here. Date, particulars, journal folio, amount. Okay, journal folio, amount. Right? Now, the left side is known as debit side. Right side is known as credit side. Okay, credit side. Okay, left side is debit side, right side is credit side. Okay, there's a name given, that is cash account. Now look at this. First item is cash. So we are opening cash account. We are opening cash account. When we are opening cash account, this is the main heading that you give when you're posting the journal entries into the ledger accounts, okay, ledger accounts, you have to give a heading ledger accounts, then start with the respective account. At the moment, we are opening cash account. We are opening cash account. Okay, when we are opening cash account, yeah, we are opening a, drawing lines like this, exactly like this, whatever you are seeing now. Okay, date column, particulars column, journal folio, amount, date, particulars, journal folio, amount. Now, in the journal, we were writing, okay, we were writing ledger folio, ledger folio. In the ledger, we are writing journal folio. We are writing journal folio. Okay, journal folio. Now, let us begin entering the data. Now, this data given in the problem, first it is recorded into journal. The data given in the problem is recorded into journal, and the data that is recorded in the journal is classified in ledger. In ledger. Okay. Now the first item in that classification is cash account. Cash account. Okay. Now what we do is we scan through the journal. We scan through the journal for item cash. Look at this on 10th April. Okay. On 10th April. Right. On 13th April. On 14th April. Cash. And there's no cash here, there's no cash here, there's no, yeah, there's a cash. 19th April. And there's cash on 20th April. Okay. And there's cash, there's a cash, yeah, on 26th April. Okay. Now there's a cash on 27th, right? And there's a cash on 29th. There's cash on 29th again, and 30th also. Right? These are the entries which has cash. Now we are not here to classify whether it is debited or credited. So we are not bothered whether it is credited or debited. Let me say that way. Okay, whether the cash is debited or credited, we have identified. Let's say here it is debited and credited. Cash is credited. The first transaction, cash is, in the first transaction, cash is debited. In the first transaction, cash is debited. The last one, cash is credited. Okay, whether debited or credited, we are picking up all the entries with cash. We are picking up all the entries with cash. Okay, right. So, yeah, come here. Cash account, first one. First one. Cash account debit to capital account. Which date? 10th April. What's the amount? 1 lakh. Okay, cash account debit to capital account on this date, this amount. Come here to the ledger. Cash account debit, okay, to capital account. Cash account debit to capital account. Okay, this is the amount. When did it take place? This took place on 10th April. Okay, 10th April. Right? And this is some, imaginary figure I have dropped. This is the page number, okay, in which this particular transaction is recorded in the journal, right? But for our academic purpose, this is not needed. Okay, cash account, debit to capital account, right? Next one, search for the cash. Yeah, there's no cash on 11th. There's no, yeah, there is cash on 13th, 15,000. Date is 13. Okay, goods account is debited. Goods account is debited means cash account is credited. Amount is 15,000. goods account is debited. Okay, on 13th April, we are writing the date in full. Okay, by goods account, by goods account, by goods account. So the cash account is credited with goods account, 15,000, 15,000. Okay, by goods. When it is given cash account debit, you're writing here. Okay, some other account is debited and cash account is credited. That some other account we are writing here by writing a prefix by. Okay, cash account is credited by goods account to the tune of 15,000. Okay, next. Let's come to the next transaction. Yeah, 13th is over. 14th, also there's a cash. So goods account debit, okay, to cash account. Goods account is debited, cash account is credited. 14th, 14th also, it is the same. 14th is the date and goods account is debited, cash account is credited. It is written on the credit side. Debited is debit side, written on the debit side. Credited means written on the credit side. So cash account is credited means it is written on the credit side with a prefix by, by, by. And with what it is credited? It is credited with goods account, 9,000. 9,000. Okay. Yeah, you can write, yeah, you can write there goods account or purchase account, whatever you want. Right, next is 14th is over. Goods account to Sham, there's no cash here, and there's no cash here on 17th. On 19th, there's cash. Cash account debit to goods account, 20,000. Cash account, yeah, cash account debit, okay, to sales account, goods are sold, okay, 20,000. Cash account to goods account, 20,000. Right? Okay, next. 19th. Okay, 19th. 20th, cash to goods account. Again, there's a purchase. Yeah, I'm sorry, there's a sale. Yeah, cash to goods account, right? Cash to goods account. Yeah, cash account debit to goods account. Okay, it is a sale of goods. Okay, so therefore I have written here sales account, 6,000. 6,000. All right. So on
goods also,
yeah, it is goods also. Yeah, goods are going out. You can write goods also. So since it is sales, okay, it's easy to understand later when you're preparing income statement, profit and loss account, it is easy to identify two sales if you write. Okay, two sales, 20,000. I'm sorry, on 20th date, 6,000. Next. 20th is over. Next, 21st, there's no cash. 22nd also, there's no cash. 23rd, no cash. 25th also, there's no cash. 26th, there's a cash. Land account, debit to cash account. Land account, debit to cash account, 50,000. Land account, debit to cash account, 50,000. Okay. Land account, debit to cash account, 50,000. All right. Let's come back. Which date is that? Remember, 26th. 26th. Land account debit to cash account. Okay, cash account is credited with land. Credited with land. Okay, so when it is credited, we are writing a prefix by. Right, 5,000. 5,000. I'm sorry, 50,000. 50,000. Next is machinery on 27th. Machinery account debit. Machinery account debit to cash account, 45,000. 27th. 27. Machinery account, okay, debit, machinery account debit, okay, to cash account, machinery account debit to cash account. Machinery account is credited in cash account, and in machinery account, cash account will be credited. Okay, 45,000. And which date? 27th. Next, 27th is over. Remember like that. 27th is over. 28th, computers to Intel, no cash. 29th, there's a cash. Cash to goods, 15,000 or sales. Okay, 29th. Okay, cash account, debit to sales account, 15,000 on 29th. Okay, next. Yeah, 29th, 15,000. Goods account debit to cash account on 29th again. Okay, 29th, it is reverse. 29th first transaction, cash to goods. Second transaction, goods to cash, means purchases. Buy purchases or buy goods.
Sale goods debited.
Yeah, buy purchases or buy goods. Okay, right, buy goods. It is 22,000 on 29th. Right, this is purchase account debit to cash account actually. Yeah, on 30th, drawings. Okay, drawings to cash, 10,000. Drawings to cash on 30th. Okay, on 30th, drawings to cash, drawings to cash. Okay, in cash account, drawings is credited, 10,000. Okay, 10,000. Now, I want you to, yeah, I want you to take the total on the debit side and the credit side. What's the total on the debit side?
$1,41,000.
Okay, on the credit side?
1.
151,000. 1,51,000.
1,51,000. 1,51,000. Okay, 1,51,000. 1,51,000. So there are some more items that we have missed. Okay, in this, the problem is the data is incomplete. Okay, data is incomplete. So therefore, we got, okay, technically insufficient data. Therefore, our cash account shows credit side more than the debit side. So how can you say the cash account shows cash account? How can you say the data is insufficient? I say the data is insufficient because the cash account will never say credit balance. Okay, the cash account will never say credit balance. What is showing credit balance? The credit side is in excess of 10,000 compared to the debit side. Debit side is only 1,41,000 and credit side is 1,51,000. Okay, 1,51,000. There's 10,000, shortage on the debit side. So the side on which the amount is more, okay, we have a convention to call that the account is showing that balance. Let's say in this problem, the account is showing credit balance. What does it mean? Credit side amount is more than the debit side. If the amount is showing on the debit side more than that of credit side, then we say the account shows debit balance. The account shows debit balance. Okay, right? Here in this problem, the account is showing credit balance. The rule is, our rule of thumb is, all assets account show debit balance. Remember, all assets account show debit balance. Means debit side should be more than the credit side. All assets means including cash. Cash is an asset. Cash account should show the debit balance. Always, not once, no exceptions. No exceptions. It should always show debit balance. Okay, so there's an insufficient data. Okay, let me say, sir, there is one, one item missing, sir. On 29th, sir, on 30th, there is one sale of 50,000, sir. Okay, sale of 50,000. So when you sell goods, cash comes in. So therefore, two sales. Okay, cash account, cash is coming in. Debit, because it is coming in. Two sales. Sales, what is sales? Income. Credit all incomes. And what is that amount? Let's say 50,000. Okay, 50,000. Now tell me, it is 1,91,000. 1,91,000. Okay, and what is the amount on the debit side, credit side? 1,51,000. Okay, and what's the difference? There's a difference of 40,000. There's a difference of 40,000. Okay, what is the difference called? That's called balancing figure. Okay, balancing figure. Okay, right? We call it balancing figure, and we write here by balance carried down. Balance carried down. Actually, this is balancing figure. Okay, balancing figure, right? Why it is called balancing figure? Because of this amount, okay, your total became 1,91,000 on the credit side also. 1,91,000 on the credit side also. Okay, actually, after updating the data, the sales incorporated in the ledger account. Journal also it is written. We don't have time, I didn't write there, and it is written here also. Okay, so once this is done, the total of the debit side is 191. The highest total is taken on both the sides, and on the side the amount is falling short. We fill that gap. That gap filling figure is known as balancing figure. And against that gap filling figure, we write by balance carried down. By balance carried down. This is how we have to equate the totals. Okay, so we bold it. If it is if it is in your notebook, you have to underline this. Okay, you have to underline this because it indicates total. Okay, this is total. This is total. Right? This is total. Okay, and non-commerce guys, please observe. All the debit side items are prefixed with a word called to, with a word to. All the items, I said I wrote two capital, two sales, two sales, two sales, two sales. It is written prefixed with to, TO2. And all the credit items are prefixed with by, 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 by. Okay, so this is one of the ledger accounts. Likewise, we had to prepare for all the items. We have picked up only one item, that is cash account. Okay, you had to do with capital account, you had to do with sales account. Okay, and the remaining accounts also. Okay, so we will do in the next class. I think it will not be as late as this as it is today. Since we have understood the concept, we can speed up. So for all the items written in the journal, you have to prepare separate account, just as you have prepared cash account. You have to prepare goods account, you have to prepare sales account, you have to prepare Tarun account, you have to prepare Sham account, you have to prepare, okay, and Virus account, okay. So all the items appearing in the journal, you have to prepare separate account. Everything will have its own set of items, okay, every account, right? All these things appear in one book called ledger. Any doubts more? Yeah, is there any doubt? Yeah, if there's no doubt, we will close it because the time is up.
Yes, just one thing.